Welcome to the StockManor.com studios. I'm your StockManor Brian Johnson. Another down day in the markets today. Starting to break some levels of support now as we come into the end of the week. So, saw a little push down at the end of the day. Did it mean anything? Are we really in a lot of jeopardy here? Well, it was a pretty strong push down. Moved from about 11:33 to about 11:23 in the course of what, maybe an hour, half an hour, something to that effect. So yeah, absolutely something we need to keep our eyes on. We are starting to break these lower levels of support, so you betcha. But in the bigger scheme of things, yeah, haven't really gone anywhere. So yes, we moved 10 points in the matter of a short amount of time coming into the end of the day, but I'm still not convinced, that we're gonna that this pullback is gonna last too much longer. So let's take a look. As you can see here on the 60-minute, we are starting to break the blue line. Finally got a break of the Dow today, back down, but look where it's holding, right at the 50-period moving average. So it did find very decent support, exactly what we would be expecting. Breaks below 10,700, giving you intraday opportunities at short positions. But remember what happened at the beginning of the day. We had a gap down, and the bulls bought it right back up again. It did not stay down there very long. So whatever news is coming out, whatever, they don't care. Markets are going to do what they're going to do. So yes, they did buy it back up, only to see it go all the way back down by the end of the day. But overall, you can see that with the gap down, it's not like the bears took charge. It's not like they took over. So yeah, we got a great start to a pullback, to a move down. You bet we do. I'm certainly not going to dispute that. But it's not strong right now. There's nothing here telling me that the bears are ready to, take over this thing and, pull the reins out from the bulls or anything, and drive the market from this point forward. What we do see here are 3 down days in a row, but look, we haven't even really matched what we did on Monday. Look at this big push up from Monday at 10,600 all the way up here above 10,700. Now we're just we haven't even made it back to 10,600 yet. Took us all week to get back there. So, still waiting for, a little bit more confirmation, certainly from the bears at this standpoint. Push back below 10,600. Okay, let's watch that 10,450, 10,500 mark. I still like that for a pullback in the markets. I've said that from the get-go, and we're not there yet. So let's wait and see if we actually make it down this low, and if we do, let's see if it holds. That'll be a big, big, big area for the bulls to be holding, and this is kind of the common theme now on all of the charts. These areas where these moving averages are starting to converge will be a huge area for both the bulls and the bears to take. Bulls have the advantage because we're coming down on top of it, so we'll see if the selling pressure can stay strong down into that region. We'll see if it can stay strong into tomorrow. How about that? NASDAQ just able to break the blue line, coming back up to retest it today, and then, yeah, dropping away from it. This is what we see a lot. Break the blue line, retest the blue line. This is very, very common. I talk about this a lot. I'm constantly talking about this in my subscriber videos to my subscribers, mentioning to them, listen, we're about to retest this, look for breaks to here, here, here on certain instances. So this is common, but we didn't see any huge move down. This is just to be expected. Gap down, and the NASDAQ was, crazy acceleration to the upside today. It did not take long for people to buy back into the NASDAQ on the downside, telling me that, listen, bulls are still hanging around up here. They're really just viewing this as an opportunity to get in at a better price. We've seen this. This is lather, rinse, repeat here. So once again, yeah, we're heading down. We're getting some kind of bearish action. I'm not going to panic yet. I'm not there yet. I'm just not there yet. I would tell you to kind of be cautious about doing the same too. Let's let this thing prove it to us. Let these charts get back in the NASDAQ below 1950. Even though I'm not a big shorter of the NASDAQ. I'd rather stick with the other indices. But if you like that type of stuff, make sure it's going to prove it to you before you start making any kind of big moves on the NASDAQ. Pretty decent, like I said, move down today, but we're still up over 1% for the week so far, coming into Friday. So if this thing's going to flatline at all, it's going to have to do it soon. SPX on a 60-minute also seeing a drop off. Look, there's that blue line, and we hit it, we broke it, we come back up and retest it a few times, and now we're starting to drop off. Big gap down this morning, like 10, 11 points to start the day. And what did it do? Well, the bulls bought it right back up. Look at that. Coming into overhead resistance with the 20 period, and then dropping back down. Kind of finishing exactly where we started the day. So who won? Who really lost? No one really. It was kind of a break even on the day when it was all said and done. Now this is going to show as a red candle, but if you guys want to take a look at your SPY charts, I'll bet you're going to see it as like a gravestone doji. Meaning that there's still real no direction in the market for the time being. Watch this 1116, 1115-ish area. You know I love that. And this is the bigger area to hold. This 1100-ish area. I also see a lot of, I think, should be some pretty strong support further on down below 1100, but we'll talk about that when it happens. Weekly SPX, here we are getting kind of that gravestone doji I just spoke about to the look of the weekly candle, but the week's not over yet. So we'll see where this thing goes tomorrow. Let's see if the bulls decide to take over and maybe buy this thing back up a little bit before the end of the week, before the end of the week is out, and then we'll revisit it again, obviously tomorrow night. But for the time being, what was a pretty strong move to the start of the week has now completely reversed and looks very, very different. This is why I don't like visiting these weeklies until it's all said and done. Keep it in mind as well. Remember this whole inverse head and shoulder that we've been watching very cleanly on the S&P? Is it a fake? I'll wait and see. VIX on a daily was actually a huge spike up. Look at this, 6% today. We've been talking about this VIX, the stinking VIX, man. It just confirmation, non-confirmation, confirmation, non-confirmation. It's been dancing around back and forth. Here we're back up to about the 24 mark, so we're still well within our regular limits. It's no panic here, but watch for, this little break up here. If for some reason the VIX really starts to spike and get crazy to the upside here, this would be a very interesting development in the markets if the VIX really started to spike and get much up above that blue line. One to really start watching. Here on the weekly, you can see the bigger pictures, and we haven't really gone anywhere. Yes, we're up almost 9% on the week. That's a big move. That's not a bad move. Sorry about that. I should turn my volume down here. Huh? You guys don't care when I get emails, do you? So moving back up here into the overhead resistance areas here is still even. Still, it would be kind of middle of the road for fear in the markets. Right now, yeah, okay, a little bit of fear coming back into the markets, but certainly nothing to write home about. Apple on a 60, up $1.17, just a monster today. Look at that thing hitting 293. One of my students brought to my attention that it isn't that far from 300. For those of you that took any of these entries we had on the way up, just keep in mind that it is getting extended. It is getting tired up here, but what a great trade. Above 280, above 285, really above 280 was my call. I've been talking about that for weeks. But finally got the break, and look at that. What a fantastic trade to the upside that ended up being. If all you ever caught was that, it was still, you're still $9 up for the week. So stay with it. If it happens to get below 285, I'd go ahead and take my profits on that trade and call it good. But I'd watch it closely coming into tomorrow, depending on which way the markets decide to go. From a weekly, Apple still looks strong. There's just nothing going on here. This whole consolidation played out exactly as it really kind of should have, and that has resolved its way upwards. Sure enough, that's exactly what we did. We've compared this to Baidu. Baidu did something similar, came up, consolidated, moved up. Apple now doing the same thing. This just looked like a 1-2 giant 3-wave up here. This looked like a very wide extended 4-wave, but look, maybe an A, B, C type of a look with off to the races on the 5-wave up. Now at this point, it's anybody's guess where it'll stop. And it can, now that it's broke to new highs, it can turn around at any moment. But Apple's been very, very strong lately. So certainly not a stock I'd want to short. How about that? FAS on a 60-minute, getting a break down today. This was one here that we saw kind of on a move to the downside. Did not get much of a slow push below these areas. So no, tricky trading today if you wanted to trade any of these triple ETFs. But breaking below these areas are what you're still looking for. Trades to the short side. That would be back below about $20.50 on FAS. FAZ, of course, heading upwards, giving us what? An opportunity to long. Now, this was a much more clean chart to me. Notice how we came up yesterday and we put in what I said was kind of this high base formation. Is what it is. Listen, the chart just is what it is. It was a high base formation on the 60-minute. The gap up today makes it very difficult to trade, but look how pretty this was. Came right back down, filled that gap, stopped right at this overhead resistance area, became support. Remember I said, what's the best way to do this? Just gap above it. Sure enough, that's what we got. Came back, held it, and screamed its way upwards. So still good trades above that 1350 area. If you caught it on the way back up, it's a great trade. Great trade. Now, once again, I think this runs into the 14 to 1425 area, and then above that, I think you're good up to 1450. Watch for that tomorrow if it continues upwards. And we have a lot of strong overhead resistance coming in at these moving averages. So you got to be careful, careful, careful of these areas as well. That 1425 area, I'd wait for it to get broke because we've got the 20-day sitting there. 1450 area for your overhead target I just mentioned, that it's also the 50-day. I'm telling you, these are good targets to be watching for tomorrow. Even if you can make the difference of between this one and this one, you're still looking at a 30-cent trade. 20 to 30 cents is not bad on these triple ETFs. That'll do it. Be back with you again tomorrow with the weekly wrap-up. Bye.